Hello traders, welcome to the TMT Daily Strategy video for Monday, January 7th. Beautiful day we had on Friday. Markets rallied finally. We are looking for this corrective rally to continue. And we had a rally based on a little round table with Powell, Yellen, and Bernanke, which I think was totally insane. And what do I mean by that? Well, you know, the government is one of the most manipulated entity of the markets, and as you all know, we all know, markets are in trouble. They still are. We had a one-day big rally and needed something for a big push, and that is exactly what we were looking for. We're looking for this corrective rally to continue, and we mentioned our targets. I'll say them again on all of the indices that we follow. Some of you do trade Russell only. Some of you trade the ES, the NQ, and the Dow. So we're going to put that together again today for Monday's trade. Now, I am recording this on a Sunday, so you guys can peruse at your leisure. You can stop the video, write down all the levels. We're coming into, well, I'm not yet. I shouldn't say coming into inflection point. We're not there yet, but we're getting very close. Where if we can have a good follow through and the futures open up Sunday night, and then we get good follow through going into the European session, and obviously the opening here in the United States, then I think we can muster up 2 or 3 really good solid days, short covering rally, maybe a down day or a pause day, an inside day, which is perfectly fine as long as the market doesn't retreat. So far I haven't heard any negative news coming out across the board, meaning that Europe, Asia, haven't heard anything, and coming out of the Trump administration. So far so good. Let's see if we can get a little bit of a pop, and then that's going to probably be it, and I'll call that market once we fail with this corrective rally. I'll call a top on the market. So let's get right to it. You can see here that 50.03 in the VXX, that's still hanging in there. And again, when this goes away, I will be putting out 1 or 2 or both actually for the research video for you guys. Did get a couple of requests, so obviously I just want to see how it trades first, if it's worth the time to go and do the research. So just to let you guys know, that's what I'll be doing by the end of the month here. Once the new instruments start to really start give me some data, because I can't do anything without any data. So VXX, you can see we're approaching now, which was resistance, now support, coming across here. So if we can get the rally of where I think we might be headed, this could probably get back to the 200-day moving average, which is fine with me. Maybe we don't see 25 again. Maybe we don't see 32 again. But right up in here, this is a good little spot here. You can see our volume profiles, a lot of supply up in here, a lot of demand in this area, supply and demand, and that just coincides nicely just below the 200-day moving average. Next is going to be the ES, and let's talk about the ES. This is what I like to see. A little bull flag, right? We had up day, down day. We had a down day, which was actually not it was an up day, another down day, but then we reversed, and then we had another solid down day on Thursday, and we reversed extremely hard on Friday. And this here, you see this little swing high, this area here, we took that out on a closing basis. That's very, very important. Why? Well, now the shorts are going to scramble, and the longs are going to start getting long with this reference point down here, and that's where all the longs, most of the stops will be for this short-term trade. So now we're looking at the 38% retracement, 25.71, the 50% at 26.43, and a 61.8% retracement at 27.15. My guess it's somewhere around the 50 and a 61.8% retracement. You can see there's a lot of supply overhead, a lot of supply up in this area here. And we also have the TMT proprietary price channels. The 21 EMA is just below the 38% Fibonacci retracement. So we're looking at something like that. I'm looking for a continuation rally. Get into here. The first area will be that 26.55. And from here to the 61.8% retracement, even to 200, I don't think it goes any further. Do I say that, meaning that it's not going to happen? No, of course not. We really don't know. But based on what we've seen since October and where we are now, there's an extreme amount of fear out there, and that's going to actually help us rally back up. But as far as the economy is concerned, the worldwide economy, is concerned, not looking too good. So we're at the top of the cycle, and nobody should be going long or adding longs to their long-term account. If anything, you should be protecting, hedging, and actually liquidating some longs on any big rallies here. We are at the end of the cycle. Believe me, bull markets cannot continue for another 5 or 10 years. It's just not going to happen until you get a corrective pullback. Yes, we did get a pullback, as you can see here, but that doesn't mean we start a new bull market, not even close. The banks are saying it, housing is saying it, financials, and you could see what's going on with tech. Now, if Trump says, "Hey, we settled with China," sure, we're going to rally, of course, but that rally will be faded, and eventually we'll start to roll back over again, just like this. Remember, when the market realizes, "Hey, that stupid round table really meant nothing. All it is was just talking up the market. The market's going to roll over again." We want to see how fast it rolls over. If we roll over, take back 50% of the candle here, I'm okay with that, just as long as we continue to move higher until we get into this big area here. So that's what I'm looking for, 38%, which I really think we get higher than that, but watch the 38, 50, and the 61.8% in the ES. Okay, really in all of the indices, but I'll point them out to you. The YM. Same thing. The YM barely just got above that swing high. Actually closed at it. We broke above it intraday, but we closed at the swing high close here. So still not bad. We're dealing with the 38% retracement, and the 21 EMA coincides perfectly, as you can see. And then that next area will be that 24,586. The 50% retracement is 24,338. Then you have this area of resistance here, what I just mentioned, and the 61.8% retracement coming in right here at the 24,949. Next is the NQ. NQ, like I said, if I'm going to do anything long, I'm looking for Qs to establish long positions in, and could be as quickly as Monday. And reason why is, as you can see, higher low from the previous low. We had sideways consolidation, a very big move up. 21 EMA held that. Now we need to break outside of this downtrend line. And of course, the TMT proprietary price channels, 67.90.50 is your next area of resistance. That's the 50% retracement. And then from there, gets to 61.8 at 70.26. Next is going to be the transports. Now, as you can see, if the economy was doing fantastic, the transports would not be down here at the lows. Barely moved on Friday. Okay, yes, it did move intraday, but barely took out the swing high. We're still in this consolidation. So 164.59, pay attention to that. As you can see, a lot of the other indices that I just mentioned were above the 23.8% retracement, looking somewhere around the 38% retracement. So that's something that what we're going to be looking at going forward. 38%, 175.88. The 50% retracement is right underneath that 50-day, so that's going to be a little bit of problem. That's going to be problematic when we get up there. 38 and the 50% retracement, then a 61.8% retracement of the 188.54. Next is going to be the spiders. Spiders had a wonderful day, as you can see here. So nice big move back up. The 38% retracement will be just under that 21 EMA at 255.38. Then you have the 38 at 256.99. And then you have here the 50% and the 61.8% retracement at 271.07. 50% will come in at 264.3. Now these are resistance areas. Okay, Thursday's low is important. That's where the stops are for the new buyers. Thursday's low in every indice that I just mentioned. Pay attention to those levels. The IWM Russell 2000 ETF, you can see, finally picking up a little bit of steam. So secondary leader, but as you can see, like the transports, nowhere close to the 38% retracement. That's a big area here. You can see that 143.86. 50% will be to 149.49, and the 61.8% at 61.8 at 155.11. These are your areas of resistance. That includes this 144.82, which is just right around that 38% Fibonacci retracements. Okay, Thursday's low again. That's going to be the low, not the opening. That's going to be the low, 131.43. Now let's get into crude oil. Commitment to Trade reports has the producers reducing their short exposure for the 14th week in a row. That's a good sign that our long trading crude is working out very nicely. And as you can see here, we tagged the 21 EMA, we caught a doji, so maybe we moved in, we come back down again. MACD RSI on buy signals, I like that. So now I want to see this get a little bit above it, and then let's see if we can get back up to this 50% retracement right up in here, that 50-day moving average. If that does happen, and we'll be in the money, having a nice in the money trade, and then we'll reevaluate either taking it off or looking for additional upside. We just need to get up there first, as you can see. So far so good in the crude oil futures. Gold, we have the 5th straight week in a row commitment to trader reports having producers leaning more short. So that means that we are looking for, if this rally does have legs, like I think it does, then gold from the safe haven trade should start to diminish and start to roll back down again. Like I mentioned before, I will be a buyer below the 1185. At one point this year, we should see a low and then a massive rally higher. Intraday charts, take a look at them, and you can see here a real nice move just above this resistance zone here of 25.19 in the ES. These are your levels: 2400, 2438 to 2483, 2513 to 2540, and your resistance areas comes in these clusters right up in here. Just write them down on your trading charts. Next is going to be the YM. Right, and the YM we got here at the 22,943, okay, 23,140, 23,246, and we got a nice little area here at the 23,475, and resistance comes in at these little cluster areas here. So just pause the video, write them down on your trading charts, and you can pick a couple of them like I like to do. I like to pick clusters: 23,811 to 23,956. Then at 24, you can see here if I had 455 or 155, excuse me, back up to that 24,356, and then so on and so on. Okay, and last is going to be the NQ, and the NQ coming in here 66, 59.19 to 59.68, 66. 60, 66, 61.43 to 62.54. Nice little area here. And then again, 64.14, 64.48. That's going to be the NQ. Again, guys, let's keep an eye on Thursday's low on all the indices. That's going to be a very important factor if the market does decide to kind of pull back a little bit. In the meantime, let's build on Friday. If we can continue to get up there, remember the 38.50 and 61.8% retracements. Let's see how the price action handles those areas, those levels, because they are areas of resistance that actually could cap this market. More likely, more the 50 and the 61.8% retracement, but we shall see. Let's take it one day at a time. I hope you're enjoying your weekend, and let's get to Monday's trading. Have a great day, guys.